Morgan McKinley has been asking some great questions here on the channel. I answered her first question that you see here about how you know when the IRS's 10-year window has dropped off in the previous video. In this video, I'm answering her second question in this comment. What are the methods by which the IRS can receive notice of a windfall, particularly in the context of kicking you out of CNC or hardship status, right? And I'm deriving that context from the fact that Morgan made this comment on my video titled, "Does IRS currently non-collectible status stop the IRS's 10-year collection statute?" So just for context here, for those who may not know what Morgan's talking about, a very viable strategy to say goodbye to your tax debt is something called IRS CNC or currently non-collectible status. Okay. This is a status in which you do not have to make any payments to the IRS as long as you're in this status. The IRS cannot come after you. They cannot go after your wages. They cannot go after your bank accounts. They cannot go after your Social Security. They cannot go after your income and assets, period. They can file notice of federal tax lien, okay, just FYI, but they can't actually take direct collection activity against you. Also, while you're in CNC status, hardship status, the IRS's 10-year time limit to collect your tax debt keeps running. So if you stay in CNC status until the IRS's 10-year clock runs out to collect your tax debt, then your tax debt gets written off. Isn't that wonderful? If you don't know, I'm talking about the IRS's 10-year time limit. Please watch the video linked to at the top of the screen about the IRS's statute of limitations on collections. Anyway, so now the IRS can kick you out of CNC status if they believe that your financial situation has improved to the point where you can now at least start making payments to them against your tax debt. Okay. Morgan is asking, how would the IRS know? How would the IRS know if I got some windfall, right? Or something, or that my financial situation has improved? Well, there are things, to answer your question, Morgan, the IRS is often made aware of windfalls via a tax document, okay? So, for example, if you win the lottery, you're probably going to get a tax form showing your lottery winnings, okay? And obviously the IRS would know once they see that form W2G, the gambling winnings form, issued to you, they know, oh, Morgan came into some money here. Let's, you can probably pay us now. Let's kick her out of CNC. Or if it's a property sale, there's going to be a 1099-S probably from the escrow company. Sometimes inheritances might kind of, and gifts might kind of fall off the radar a bit. But if you're the beneficiary of a trust, and it's a trust that issues you, a K-1 or something, the IRS would be aware of that. So the tax forms is one way the IRS becomes aware of windfalls. But Morgan, it's not only like huge windfalls of like millions of dollars that can get you kicked out of CNC status. It could also be if your income goes up by a great enough amount versus what your monthly expenses are, times 12, right? What your annual expenses are essentially when you got placed into CNC status, then the IRS could then kind of just systemically remove you from CNC status based on your income per your tax return. Okay. So we see this happen a lot. And this is why we kind of warn people, right, about CNC status and all this. It's like, okay, you just lost your job. You're getting unemployment. It's not as much as what you were making before. Yeah, you technically qualify for CNC now, but hey, are you planning to kind of return to the same line of work and make the same money you did before you got laid off? Well, yeah, probably. Well, once they file that tax return for that year that they're making more money, it's likely the IRS will systemically kick them out of CNC. Okay. Now, there's sometimes a strategy we employ is even if someone qualifies for CNC, we may still just put them in a low dollar amount PPIA, partial payment installment agreement, because the IRS is, at least in our experience, is less likely to kind of kick people off PPIAs than they are to kick people out of CNC. Okay. So kind of a word to the wise there. But yeah, Morgan, kind of to answer your question, the IRS has their ways of, figuring things out, knowing, if your financial situation has changed / improved. And obviously, just because your financial situation has improved doesn't mean that you still don't qualify for CNC, right? You might be making more money, but then, hey, all these other costs might have gone up too. Your family might be bigger now, right? There's other things. Maybe the reason you're making more money now is because you had to move to a higher cost of living area, right? And so those housing expenses are higher, right? So there's a whole, list of things that you can argue to the IRS to remain in CNC. You're going to put back into CNC. Okay. That's something you or your representative will have to figure out. But Morgan, great question. Thank you so much for asking it. Anybody else has a question, please leave it below. If you owe the IRS or your state at least $10,000 in back tax debt, you qualify for a free consultation with us here at Choice Tax Relief. Please give us a call, 866-8000-TAX. That's 866-8000-829 to schedule your free consultation. Or you can go to choicetaxrelief.com, fill out the form on the homepage, and we will reach out to you. Thank you so much for watching, everybody. I have some other tax relief related videos here on the left-hand side of the screen for your education and enjoyment. And I'll see you in the next one. Bye-bye.